as an economist, we'll leave the assumption, we'll leave the assessment of how transmissible this is and how severe symptoms are and all of those things that we really need to understand. We'll leave that perhaps to the scientists. But where does that leave you as an economist and the assumptions that you make about Omicron and how damaging this is going to be from an economic perspective to South Africa?
Yes, hi. Look, we're still watching it, see what's happening. But I think what's very interesting is over the last 2 days, we've actually seen a large fall in cases. So we've actually seen about a third of a drop from really Saturday to Sunday, dropping from 16,000 new daily cases to 11,000, and then yesterday down to 6,000. So, you know, it does seem as though there's volatility in the numbers, but if this persists, then it might even be a flash in the pan for our fourth wave. So obviously it's far too soon to tell. But something to bear in mind as well that we look at when we are obviously considering the impact on the economy is that about a couple of weeks ago, we saw a large 17 or actually 18,000 jump in cases, new daily cases in one day from 300 the day before. And of course that sparked panic worldwide, given that South Africa had obviously sequenced and identified Omicron here. So, you know, the reality was that wasn't due to Omicron. That was due to cases that had been missed or just not included in the statistics for weeks and months beforehand, and we're just suddenly lumped in that day. So really that should be excluded. If you do, you see this gradual build-up, then a sudden quickening towards the weekend, and then a drop-off. So we have built this into our GDP forecast because we did anticipate a fourth wave, as I think many people did. And of course, we were worried it might even start in November, which of course it is doing so. So we're looking perhaps on a quarterly change for GDP of about 0.5%, but then much will depend on the lockdown restrictions, and perhaps they won't be that severe after all, given that we've got the sudden, you know, downward movement this week.
Good morning, Annabel. This is really interesting context, and I think you pointed out that kind of one-off, one-day jump of 17,000, 18,000 cases, which had distorted the numbers. Bloomberg used the Johns Hopkins data, and over the past week to yesterday, there were 74,000 cases in South Africa, just a little over. That was versus about 1,500 cases towards the end of November. So even if you take out 18,000, we're talking about an increase of 50,000 cases per week. I mean, how much of a downside? I mean, it's very early days, and we don't know, and it's very volatile data, so we can't read too much information either way. But how much downside is there to kind of the fourth quarter GDP situation if it turns out that Omicron is as bad as some of those volatile numbers might suggest?
You know, early data we've been having from doctors in South Africa who've been treating the cases is that it's very contagious, but it seems to have, and I'll use the word seems, to have much milder symptoms than the Delta variant had. So we've got much lower hospitalization in South Africa from it. And if that's the case, and if this proves to be more virulent and actually pushes out Delta from the scene, that's actually more of a positive than a negative, because you're getting a virus that's replacing, you know, the one that gives you a more severe situation, you know, higher fatalities, with one that gives you less fatalities, that's less severe. So that could be a positive. But as you and I, you know, we're talking about just now, it's too early to say. So if, you know, we do carry on with this 50,000 cases a week, you know, as opposed to actually dropping back towards a lower figure, which the last few days data has seen, then as I said to you, we're looking at that, you know, maybe 0.5% GDP growth for the fourth quarter. Remember, the second quarter had growth of about 2%. Now, I think something we haven't talked about is our third quarter GDP. And again, I'm talking on the quarter-on-quarter basis. In South Africa, the third quarter GDP is likely to see a contraction of close to 2%. And of course, that then will give you a bit of a base effect. So you might see what I'm saying now, that 0.5% lifts coming off a very low base from the third quarter. And of course, the third quarter impacted by July's riots and unrest in South Africa.
Annabel, thinking about this from a behavioural economics perspective, what are you seeing in people's behaviour? Because we obviously all hope that hospitalisations remain, come down and do not go much higher, and Omicron turns out to be less severe than perhaps other strains. Everybody, of course, hopes all of that. But many people must be nervous in South Africa, given how dominant Omicron has now become as a variant. Are you seeing people change their economic behaviour as a result?
Look, you know, certainly I think you're right on the consumer perspective. And, you know, we have seen a big upswell of online shopping. And, of course, now with the expectation of the fourth wave, and then, of course, the potential advent of the fourth wave in the last few weeks in South Africa, we've seen a real push on online retail as opposed to in-store. But I think the other reaction as well has been, you know, government pushing even harder for vaccination. And, of course, you know, our vaccination, you know, around, if not below the 50% mark of our population, even though we've opened it up to children over 12 now. So we do have vaccine hesitancy, but we also seem to have vaccine disinterest. So government's starting to put some incentives through and even talking about mandating vaccination as well in certain places. So they are discussing that as well. And I think, that's really a key point that can help, certainly help change behaviors in South Africa, of course, boost the economy. But yes, we have seen a number of cancellations of large events, large, almost commercialized parties for end-of-year school leavers and those types of potential super spreader events, but even for workplaces as well. Companies have now started to send their workers home if they haven't done so already, and said, everyone needs to now try and work from home if possible. And that's obviously, many of the larger companies that can do so. So I suppose, there is already the shift to better behavior. And in South Africa, we have actually a very strong mask wearing culture, and, there's understanding of sanitization as well. So I suppose we've learned a lot from the past year.
Annabel, obviously inflation is one of the big global concerns this year in South Africa, just like anywhere else. And now with the latest kind of disruptions, even if they prove only temporary, we're extending the labour market problems, some of the supply chain issues because of some of the Omicron restrictions that come through. And now on top of that, whether fairly or not, the rand has really suffered in recent weeks, which is helping more imported inflation. How worried are you about South Africa's inflation picture?
Yes, so we've had a jump up because we've had some very large petrol price increases, fuel price increases. And of course, that has been from the high oil prices globally and the rand's weakness. And we've actually had about over R2 a litre. The petrol price is now at a high for South Africa. That's pushed up inflation quite substantially. We have then seen a bit of improvement in a bit of lowering of the oil price recently. But of course, our rand is particularly weak. And that's really happened from really the middle of October, when the anticipation of QE tapering in the United States came to the fore, and the rand weakened ahead of that, and then of course now heavily through November as well, as the United States started tapering. So of course what's afflicting the domestic currency at the moment is the worries that we might actually see a quickening in tapering in the United States as well of its asset purchase program, and as a consequence of that then a pull forward of interest rate hikes in the United States. So I think, that these are some of the factors which are really affecting the currency for us. And of course, then that's sparking risk, or for your riskier assets, your emerging market assets, particularly your emerging market currencies. Now, we are finding a bit of comfort in the fact that the US non-farm payrolls were perhaps weaker than anticipated, although of course the unemployment rate came down quite well for the United States. So a bit of a mixed bag there on that data. And of course, that's why the rand hasn't seen much strength from it. But if we get a CPI inflation print from the US, which is lower, that then could help our currency. But that said, if we have a look at the middle of this year, the rand was at about 13.50. Now, we're not expecting to see the rand go back there. And we're not expecting to see it go back there either next year. We're thinking it's probably going to remain in the 15 to 16 range.